Hello, everyone. Welcome to Income Investors. My name is John Whitefoot, and with me today is Zulfiqar with a quick economic update. Our goal with these videos is not to tell you what to buy or sell, but rather inform you with what's going on. And if you want to read more about what Income Investors is all about, head to incomeinvestors.com. You can find the link to the website in the description below. So, Mo, what have you got for us today?
Today, I want to talk about stagflation. I think stagflation for the US economy could be a likely scenario in the coming quarters. And it is really the worst of both worlds and could make investing very tricky.
Now, Mo, before we go into any details, could you explain in simple terms exactly what stagflation is?
Yeah, so in simplest term possible, stagflation is when there is slowing economic growth, higher unemployment, and persistent inflation.
That is very straightforward, simple explanation of stagflation. Now, tell us what you're seeing.
So I see the US economy is cracking, unemployment is starting to creep higher, and inflation is getting really sticky. Now, let me go in details. When it comes to the US economy, there are clear indications that problems are brewing. For instance, take a look at the delinquency rate on credit card loans at all commercial banks in the US. In the first quarter of 2022, delinquency rate on credit card loans were around 1.67%. At the end of fourth quarter of 2023, the rate was at 3.1%. Mind you, the 3.1% figure is more than a decade high level. And worth noting that delinquency rate got to these levels in just few quarters. And it's important you understand that US economy is highly based on consumption. If consumers are having hard time paying their credit cards, you really think they will go out and spend lavishly? But that's just one data set. There's also slowdown happening in the US housing market. The rate of construction growth is slowing. Retail sales are stagnating. Personal savings is dismal, and the list goes on.
Okay, now what more broadly is happening with the jobs market then?
Well, it doesn't look good. The unemployment rate is still very low, but conditions underneath are getting worse. Take a look at the Challenger report for the month of April 2024. This report is issued by Challenger, Gray, and Christmas Inc., a global outplacement and business and executive coaching firm. This report tracks a number of job cuts announced by US-based firms. Year to date, US companies have announced 322,043 job cuts. And the time for finding a job is increasing. The average job search time lasted 3.05 months in the first quarter of 2024. This is compared to 2.7 months in the first quarter of 2023. And hirings aren't looking good either. So far in the year, US employers have announced plans to hire just 46,597 workers. This is the lowest total in the first 4 months of the year since 2016.
What about inflation?
Certainly, the rate of inflation in the US has come down from, early 2022, but it remains well above the Federal Reserve's target range of between 2 and 3%. In the first 3 months of 2024, the Consumer Price Index, or CPI, as it's known, and it's an official measure of inflation at consumer level, has increased 1.1%. And if we extrapolate a little bit here, assuming that this pace continues, then the annual rate of inflation in the US is looking at around 4% per year.
Now, what does that actually mean for our viewers and other investors?
John, I mentioned earlier as well, stagflation is worst of both worlds. You have slowing economy and higher inflation, and unemployment is increasing. In times of stagflation, being defensive pays versus being aggressive. Growth stocks and consumer discretionary plays could get hurt badly. Gold, utilities, consumer staples could outperform the overall market.
Thanks, Mo, for your insights. If you want to check out Income Investors is all about, you can find the link to our website in the description below. While you're there, you could sign up for our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. We will be back with income picks soon, so stay tuned and don't forget to like this video and subscribe to our channel. Goodbye for now.